Welcome, dear community. We have a big pleasure today to talk with impact investor Tidal Invest, and two of three amazing founders, Julia and Dima, are with us tonight. Welcome, girls, and thank you for taking time to speaking with us about this important topic.
Thank you so much, Dan.
Nice to meet you.
Julia, Tidal Impact is a very, very exciting company, and I think it's best that you pitch it. It's neither a VC company, but it has investment capital for a specific field of startups. How do you position yourselves? How do you pitch yourselves?
Great, great question. I'm going to give a brief introduction about Tidal and how we started. And so Tidal Impact is an impact management and investment company. We're actually officially based in the US, and we have a third co-founder called Mohanad, who's also our CEO, who's not on this call today, but I'm sure he watched the interview. And our main philosophy is about creating an alternative model to support companies over the long term, because before we even founded Tidal, we all discussed the challenges around impact investment or investment on its own. Because right now, especially if we look at, let's say, Silicon Valley, there's a lot of talk about, you know, the next unicorns, and it's mainly all about profit maximization and hockey stick growth and all of these things, which have worked very, very well over the last few decades. But now, if you look at impact-driven companies, a lot of them aren't typical VC cases, and so we wanted to provide a model that would cater to those companies and help them to flourish over the long term.
So sorry, go ahead.
Okay, so essentially we have two activities that we pursue, or two areas. And so the one, on the one hand, it's all about impact measurement and management. And Dima will tell us a lot more about that because she's our Chief Impact Officer. But we work with companies, whether they're startups, investment companies, or corporations, to help them measure and quantify and project their impact through helping them create the right frameworks, methodologies, reports, due diligence methodologies, and all of these things. Because for us, we said we need to understand what impact really means, right? And we need to be able to measure it to understand whether a company is actually a good investment or not, which leads me to the other area, the investment side. And so today, what we've done is create what we call Tidal Impact Coalition of like-minded family offices, high net worth individuals, other investors who all believe that impact and financial return can coexist, and you don't have to compromise one for the other. And so when we see companies that fit into our themes and into our own thesis and pass through our impact due diligence, then we would create dedicated special purpose vehicles to rally the funds into this vehicle through our coalition and then invest into the companies. Happy to talk more about what kind of companies we look at a later stage, but our vision is really to bridge that world of being able to, you know, create long-term impact, but also create healthy financial returns. And in the future, and that's the last part, we aim to become a full-on balance sheet investor and are also planning our own raise to support more companies.
When, if I may ask? If it's not
probably probably starting towards the latter part of this year, so H2, maybe Q3, Q4.
Very good introduction. Thank you, Julia. So we have a lot of topics to discuss from the material that you offered here. Dima, the measurement of the impact is one of the main topics that we see on the market. Sometimes it's not solved. Many people talk about impact, but cannot really quantify it. How do you guys do that?
Yes, this is a very important question. And it's, like you said, something that we've been seeing a lot of literature on. We've been seeing the emergence of a lot of frameworks, and I'm sure you've heard this phrase before, but we're now calling it the alphabet soup. And a lot of the content is being lost between sustainability-related standards versus impact measurement frameworks and principles. So what we're seeing as of now, that there's a move towards differentiating ESG and sustainability, operational sustainability, from impact. And impact is becoming more the identifying the purpose of why you're allocating capital and what is the change and the long-term outcome you want this capital to achieve, whether it has environmental or social impacts. And as of now, what we're interested in at Tidal Impact is not creating another impact framework. And we think there's already too much out there, and there's a lot of work that has been put in that we need to utilize and reflect on and reconcile. So at Tidal Impact, when we follow our impact assessment process and our impact due diligence, we utilize existing frameworks that we take and customize based on the deal that we're looking at. So we've actually simplified things and took the skeletal framework of the impact management project, since it has the 5 dimensions of impact, looking at what is our contribution as an investor or our additionality, who are we impacting, what type of impact are we creating, how much are we creating, and what are the risks associated with this impact. We then answer these questions by identifying specific targets and KPIs that could be applicable to the type and the industry of the company we're looking at. And at Tidal Impact, it's worth it to mention that we focus on 2 main themes: responsible consumption and production, and what we call impact media, media that aims to create learning and awareness around social and environmental topics. So that's the approach that we take, and then we work very closely with potential or deal flow companies to identify metrics that they can answer today and that we can project into the future, typically 5 years into the future. And then after the investment is made, how can we still work with these companies to follow through on the impact metrics that they set, but also set more ambitious ones as they grow.
So, Julia, in terms of deal flow, what would be the ideal start or ideal company to approach you? Where do you invest?
Great question. I think I can just give you our current examples. So we're just closing a deal, which is a sustainable materials company. They're called Natural Fiber Welding. You can Google them. They have created the world's first 100% plastic-free material that can replace leather. So both real leather, plastic, synthetic leather, but also polyester and lots of petrochemical-based materials. And they are currently closing their Series B, which we're part of, and are sort of a B to B2C company. And so they serve larger corporations, whether they're textile companies, big fashion brands, or also automobile companies, to replace certain materials. But then they also have plans to spin off their own direct-to-consumer brands. And so we really like to work with companies that have sort of like a platform play, so that have multiple applications to them and that can therefore have a much bigger impact both directly and also indirectly. So that's a company or a field that we find very interesting, because even if we just look at the fashion industry, it's one of the most polluting industries in the world, right? So if we can find a way to make it more sustainable, that's a huge thing for us. There's another company which is in the impact media field, which Dima mentioned, so very different from the sustainable materials world, which is called Seed and Spark. And what they've done over the last 10 years is to build the largest catalog of BIPOC films, meaning films created by African Americans, by non-binary people, by people that are more, from minorities, and all around social topics, social challenges such as racial injustice, for example, or diversity issues. And what they've done recently is create a digital platform to then use those films and to create long-term behavior change in larger corporations around these issues, which they've done very successfully in many big companies. And so those are 2 examples of great companies. We obviously have more in the pipeline, but I'd say anything in the realm of sustainable materials, sustainable food and agriculture, sustainable e-commerce, but also in the media field is very exciting for us.
I mean, I don't know if you know that, we have a broadcast on Earth is our vertical where we look at sustainability startups, sustainability solutions on the broader range. And our editor-in-chief, Martin Pache, has a weekly format with Markus Linder, one of the key founders from Austrian, let's call it sustainability ecosystem or climate tech ecosystem, one change a week. And they invite different startups there. So let me give a few examples. A startup who produces a 3D printed salmon, which has a lot of the same kind of health effect, positive one as a real salmon, or synthetic meats, or things kind of that like you mentioned. Would those be the targets? Could they approach you? Would those startups be interesting for you?
For sure.
Okay,
for
perfect.
sure.
So,
and maybe one more thing to mention is, am I still here?
yes.
Okay. One more thing to mention is we look at companies at the Series A stage, sometimes Series B. So for example, the material startup is Series B. And companies that also, if they're based in Europe, have plans to expand to the States or North America, because Mo and Dima are based in North America. But definitely would be very interesting to speak to those companies. Okay, we might send you a few intros as well. Rebel Meat, one of the big startups as well from Austria, so we'll give you a few intros. How do you mentioned at the beginning, Julia, that these startups often are not interesting for VC companies, yeah? Has that changed? We see, for example, one of the main VC companies from Austria or even in Europe, Speed Invest, has a climate tech landscape, and they see a potential of creating new unicorns out of this space. How would you say? Do you think your startups in the future are going to become more attractive for the VC money as well? For sure. I mean, now there are so many climate tech VCs popping up everywhere. So definitely there are a lot of companies that are good fits. I also think that a lot of impact VCs are approaching companies with a bit of a different mindset than very conventional companies. And I have to say that the companies that I just mentioned, they have a really promising financial profile as well. So they are definitely interesting for VCs, but many of them, or some of them, actually prefer to work with, for example, families or just more patient capital. So I think it very much depends on the type of company and also on the type of scalability of that company. And I would say that technology companies definitely are very interesting because of their ability to scale up. I think for hardware companies, it's coming up. It's a little bit harder because, of course, it takes a little bit more time for those to scale up, to go through R&D compared to digital companies, software companies. But I would say there definitely is a huge trend. So I'd say it really depends on the company. If you guys raise your own investment fund, are you going to operate it as a VC business model, or more like a private equity, or like you said, family office? What do you think? Mm-hmm. So our goal is to become a balance sheet investor. So that would mean we might have shareholders in our company, but it wouldn't be the same relationship like an LP would have with a fund. And so that means that we would not necessarily have, let's say, a fixed timeline of, say, 10 years to return the fund, but we could extend that and have a little bit more flexibility in terms of how we work with the companies. And another thing also to mention is that as a VC, obviously you expect the company to have an exit or have some sort of liquidation event in order to make the money. But for us, we also in some cases negotiate dividend payment plans for the companies, which would represent one way of returning the money, but it would be a little bit more over the long term. And many of our coalition members are very much on that path as well. So they call themselves patient investors, and they want to see the impact coming back over the long term, and thus are happy with also the return, being spread out across a longer period of time. Is that a part of the impact definition?
Yes, absolutely. I can jump in here. I think what we've seen happen in the VC model that we're trying to change and disrupt is this idea of making a lot of money very fast. And in order for you to create real long-term impact, you need patient capital, like Julia mentioned. And this is where we actually this is why we actually decided to set up Tidal Impact as a holdings company, as a holding structure. This allows us to work with the portfolio companies, become, their partner in how they measure and report on impact, and how they decide to change operations if there's a need in order to create the needed environmental and social impact. When there's a lot of pressure and tension on constant growth and constant monetization, no matter what, at all expenses, we feel like this creates pressure that could potentially jeopardize impact. Now, that being said, we are convinced that a true impact and purpose-driven company will not be able to grow and become financially stable without creating impact, because impact is at their core. If they're able to do that, if they're able to be financially successful while stopping the impact that they were set to create, then this wasn't an impact company. This was a company with some sustainability considerations in their operations, but they were not truly impact at their core. But even with that, there's a strong belief that we want patient capital that looks at the return on investment financially, environmentally, and socially.
Patient capital is definitely a term that I will take with me out of this talk. It's interesting, and I think a very important category. One question, because we speak with obviously a lot of founders on a daily basis, yeah, and we see the genuine kind of need or motivation to have impact. But you have startups that maybe when they founded their company didn't think the same way, yeah? And maybe this has evolved because it's also kind of a mindset of many generations and mindset that's coming up. Can you help such startups transform, let's say, their products or their business model to become an impact startup according to your definition? Or would I have to found and start my startup already kind of in your sphere?
Yeah, the answer depends on how are we engaging with the startup. So if we're engaging with it as an investment opportunity, meaning we're diligencing this company for a potential investment on our part, then that's not a profile that we would be interested in, because it seems that this company wouldn't be an impact company, meaning they could be prioritizing financial returns and then maybe thinking of what other good things they can do for the environment and society. So that's not typically what we want to invest in. We want to invest in a company that has impact creation at its core. Like, for example, the company that Julia mentioned. This company creates leather replacement. So that's their core product. If they stop producing it, their environmental impact stops as well. If there are other companies that didn't start that way and now are considering it, we can help them and service them through our advisory practice. And that's what we call IMM, okay. Impact Measurement and Management. So we would work with them to identify their material topics depending on their industry. We utilize a holistic stakeholder engagement process to make sure that whatever impact they want to embed into their operations is meaningful to all types of different stakeholders. And then we look at how to tie that impact with their growth strategy.
Perfect. Julia, where do you find these startups? Where does your deal flow come from? And how many targets are you looking at? How many investments have you made so far?
Yeah, so right now we're closing 2, and because Tidal is only 2 years old, or I'd say 1.5 years old, these are the first 2 that we're wrapping up, so that's very exciting, but we obviously have a lot more in the pipeline. I'd say most of the companies are coming through our own network, the network of our advisors. We have amazing advisors such as, Sean Sutherland, who was at the summit as well. She's a dear advisor to us, and also venture partners that we have who are constantly sending us relevant companies, and also the communities that we are in. Obviously, you know that I'm part of Sigma Squared, and so there are great companies in that community, but there are lots of other targeted communities in the climate space, in the social impact space, and so I'd say it's really through those networks that we find the right opportunities, but most of them through the advisors, through the venture partners, and through our own personal network.
Do you think that given the structure of your investors, of your let's say patient investors, you will remain in the Series A, Series B, or let's call it a bit later stage phase, or could you also go in the pre-seed, seed phases in the future?
Yeah, that's a very good question. Actually, when we were thinking about our investment strategy at the very beginning, we thought of potentially investing in aligned impact seed funds, because if we were to go direct, then Series A, Series B would be a little bit more de-risked than obviously the very, very early stage companies. But to build a relationship with those companies, we thought that it could make sense to have that through other very early stage investment funds.
What's the best way to reach out to you? Write an email or like ping you up on LinkedIn, or where can people approach you?
LinkedIn, website, tidalimpact.io, email, it's just our first names and then at tidalimpact.io. So super straightforward to reach out to us. And there was one interesting notion I wanted to bring up, because you mentioned patient capital. There's also a term called zebras, if you've heard of it.
Yes.
So there's like zebras versus unicorns. And so I'd say we're chasing zebras more than we're chasing unicorns, which are also could be billion-dollar companies, but they're also returning amazing impact.
This is what I was going to ask. We did we had an initiative last year in Germany, and one of the professors who was part of this initiative, Professor Tobias Kollmann, he created kind of a new definition. Besides unicorns and zebras, he included, I think, also horses and cows. So he spread it out into 4 different categories, but he's a professor for entrepreneurship, one of the co-founders of Auto 1 and one of the members of German board of business angel investors and startup association. So a real insider of the German ecosystem. And this topic was very dear to him. So he developed a broader definition of also including horses and cows. I will send you that as well in German. But I was going to ask, and I think you answered it already. Can a zebra become a unicorn as well? And where do you see the difference actually?
Yeah, great question. So I'd say for sure, in terms of the, becoming a billion-dollar company, yes, 100%. But I'd say it comes down to the definition that Dima was mentioning. So I love the example. So Dima, you always say Philip Morris could be considered a sustainable company, right? Because they can have sustainable operations, but their core, so their purpose obviously is to create more tobacco in this world. So that's bad. So a zebra in comparison would be a company that has a positive purpose at its core. So for example, a company that, like the materials company, the more it creates materials, the more materials it creates, the better the impact on the environment. Or maybe access to clean water. The more access to clean water they provide, the more money they will make. And so I'd say that's the main difference, where at the end of the day, both of them can become billion-dollar companies, but one is just also, has the impact at its mission. So the impact will, it needs to be there as well, not just the billion-dollar valuation or the financial return.
Perfect. Thank you guys so much. We'll keep in touch. Let us know when you close your deals, and obviously when you find new ones as well. And we might send you a few targets from Austria as well who could fit your investment portfolio. Thank you for taking time and explaining Tidal Impact. We'll keep you posted from our side on startups, and please keep us posted on your development.
We will for sure. Thank you so much, Dayan.
Thank you guys for being with us. Tidal Impact, super exciting impact investment company, let's call it that way. And we'll keep in touch with them. They're closing their first two investments. Stay tuned, more stories to come. Thank you and goodbye.